There's plenty of courses and resources out there to teach you how to start and grow a business, but very few, if any, that'll teach you how to do that without going bankrupt in the process. So imagine this. You're me. You're working as a freelancer, and money is simple. When you make $1, you make $1 minus taxes, and you can spend the rest of your money however you want. Then you decide to start an agency, and money starts to get a lot more complex. Now when your business makes $1, it's $1 minus software expenses, contractors, vendors, payroll, finance, legal, marketing, distribution, saving for future expenses or investments, maintaining a cash reserve, and of course, taxes. And like a lot of marketing and creative agencies, you manage your money with 2 bank accounts. An operating account that holds the money that's yours, and a tax account that holds the money that's the government's. Now, I don't know about you, but for me, the more complex our expenses got, the more difficult it became to understand the financial health of the business, besides more money good, less money bad. I had no idea how much I could afford to spend, how much I should save, how much can I give to myself, how much should I give to myself. I didn't know how to answer these questions, which meant that spending was either unruly or reluctant, and I didn't know where on the spectrum that we were, which is just dangerous to the long-term success of the business. Underspending meant I'm slowing the growth of the business, and overspending meant I was increasing the risk of financial bankruptcy. Looking back, I can say that there were times when I was underspending, where I could have afforded to hire somebody, or I could have afforded to pay myself more. And I can confidently say that there was a lot of times where I was overspending, where I was investing tens of thousands of dollars into some things that worked out and some things that didn't. But what I didn't realize is that if 2 clients canceled, then I wouldn't be able to continue that spending or possibly even make credit card payments, and if I didn't get that monthly recurring revenue back within 3 months, then the business could go under. My financial literacy was weak, and it was becoming more and more clear over time just how much this was hurting the agency. And I had to do something. So I started reading books. A lot of books. And while all those books were interesting, one of them shined above the rest. The solution to my ever-growing problem was to create a cash flow management system. It made our finances clear and easy to understand, as well as much easier to manage, to the extent that it helped us increase our net margins from 25% all the way up to 43%. I want to show you how this system works so that you can adapt it to your own business, as well as give you a spreadsheet to make it a lot easier to manage. Now I'll show you how the system works, but if you want to know why it's so effective, then you're going to have to read this book. At a high level, this system is about setting rules for your money, and one of the easiest ways to uphold those rules is to separate each rule into a different bank account. Let me show you what the structure looks like, and then we'll go through an example. The OPEX, or operating expense account, is where all the money comes into your business and where most of it comes out of your business. Every time you run your finances, this account goes to 0, minus the keep amount, which I'll talk about in a bit. That's the rule the OPEX account has. Money flows from the OPEX account to several other accounts, which all have their own rules as well. We'll skip over this for now until the example. The payroll account only holds money to cover the next time payroll is run, including net pay and payroll taxes. The tax account holds money to cover tax payments when they're due. Most of the time, this is just income and sales tax at set rates. If you're expected to pay other taxes like capital gains, then you'd move those funds to this account separately based on your capital gains tax rate. If you're wondering why payroll taxes are paid out of the payroll account and not the tax account, is because payroll platforms like Gusto will only allow you to connect one bank account. The dividends account holds money that will be paid out as distributions to shareholders at set dates. Personally, I prefer quarterly. The reserve account is the break glass in case of emergency account, which should ideally never be used. The account is funded up until 6 to 12 months of a cash reserve. Personally, we keep a 6-month cash reserve. This means that the business can make $0 while paying every single expense for at least 6 months. And finally, the savings account, which holds the funds that the business can spend on whatever it likes without the fear of running out of money. Theoretically, this account should be able to go to 0 at any point in time with little to no effect on the business aside from slower growth due to less capital being deployed in the business. Hopefully you can start to see how powerful this can be compared to just having 1 or 2 bank accounts that are all over the place. While it may look complex in practice, it takes me no more than about 10 minutes every other week to run our finances. Now let's look at an example followed by a spreadsheet to help you do this. Let's say $10,000 is currently sitting in your OPEX account and you have a keep amount of $1,000. The keep amount is the minimum balance that account must maintain. This is usually to avoid overdraft fees as well as having to track down overdraft payments and calculate those in as well. Effectively, this means the account balance is actually $9,000. Now you pay any bills that aren't payroll related. This may be paying off credit cards, making loan payments, office rent and utilities, etc. Basically anything that hasn't already been auto-paid out of the OPEX account. Let's say you had to pay $4,000. Once those payments post, there'll be $5,000 left in the OPEX account, ignoring the reserve amount. Next, the total payroll and payroll taxes to be paid out before the next time you run your finances is moved to the payroll account, which is set up to automatically run payroll on set dates. Let's say you have $4,000 a month in payroll obligations and run your finances twice a month. $2,000 is moved from OPEX to payroll, leaving $3,000 in the OPEX account. That $3,000 is now considered your profit since the last time you ran your finances. You'll move what percent you expect to pay in taxes over to the tax account. Personally, I like taking my estimated tax bracket plus 5% just to be safe. So if I expect to pay 25%, I'll put 30% into this account, and if I expect to pay 30%, then I'll put 35%, and so on. This is mainly because we're a pass-through entity, an S-Corp, which may not be a big concern to you if you just have fixed corporate tax rates. But let's say that we allocated 30% for this tax account. We'd move 30% of the $3,000 or $900 into the tax account, leaving the OPEX account with $2,100. The $2,100 is now our post-tax profits. A percentage of that is moved between the dividends and savings depending on the percentages you set. If you're trying to grow aggressively, then the dividends rate is probably low, but if you're trying to maintain where you are, then it's probably high. Let's say it's 40%. We move 40% of the $2,100 or $840 into the dividends account, leaving the OPEX account with $1,260. Now the reserve account is very important, and funding it to its full amount, in my opinion, should be a priority. The reserve account has two rules. The first rule is to reach the maximum amount, which in my case is monthly expenses times 6. The second rule is that when the reserve is not met, what percentage of funds move into that account instead of into savings. In this case, we'll say 80%. So if our reserve is not met, 80% of the 1,260 or 1,008 is moved into the reserve account. This does two things. On one hand, it forces us to make having a 6-month cash reserve a priority, and on the other hand, it encourages us to have minimal expenses and to keep an eye on them more closely, as more expenses means a higher reserve, which means more money sitting in an account that you're not allowed to touch. But if the reserve was already met, then $0 would go into it. Finally, the remaining balance goes into the savings account. If the reserve was met, then it would be $1,260. If the reserve was not met, then it would be what was left over, which is $252. This brings the OPEX account down to 0 plus the reserve, in this example $1,000, once all the transactions are posted. Now you could have more savings accounts with specific purposes, such as team bonuses or trips, being very specific about how much of your savings you're using on additional marketing activities, or a short-term account in which a percentage of savings are moved into it until it hits a set goal, in which you then buy a new company car. The system is built to be incredibly flexible, so you may have needs or wants that somebody else doesn't have, and it should be relatively easy to plug those accounts into the system. Now you may also be wondering what happens if there's a time period in which we're not profitable and we've actually lost money. In this case, anything that would have gone into the OPEX account that couldn't cover bills or payroll, that amount then moves from the savings account into the OPEX account, and nothing moves into the tax, dividends, or savings accounts during that time period. In the worst case scenario, the savings account can't cover everything, and you have to pull funds from the reserve into the OPEX to cover expenses. This can be a lot of information to take in all at once. But luckily, I built a spreadsheet that you can make a copy of down in the description, which does all the math for you. Looking at the sheet, we can see our workflows for managing our finances every 2 weeks. If we put $10,000 as the OPEX balance and $4,000 as bills paid, just like in the example, you can see the steps telling you how much to transfer into each account, and it's figured out automatically for you based on the allocations that you've set. If we update the reserve to be met, you can see that it accounts for that as well. If we actually had $8,000 in bills, then the OPEX account would be at a negative $1,000, and it accounts for that as well by telling you that you need to bring funds in from the savings account to the OPEX account. Then on a quarterly basis, we'll pay out distributions, bringing the dividends account to 0, reviewing our allocation percentages and amounts, as well as updating our reserve target. On a yearly basis, after taxes have been paid, any excess amount in the tax account is moved into savings and distributions based on their allocation percentages. So if $1,000 was left in the tax account from last year after filing your return and your distributions and savings had a 60-40 split, then $600 and $400 would move into each account respectively. Then, at your own discretion, if the savings account has an excess amount of money in it with no plan as to how to deploy that capital, then the excess can go into distributions. This is completely optional. For example, if our savings account had $50,000 in it and we're not planning on any big marketing pushes, hires, or software development, then we may take $20,000 to $30,000 and move that into distributions. Like I said, you can get a copy of this sheet as well as the slides in the description below. This system is something that I've adapted to my agency, my investment company, my personal finances, and I'm currently working on rolling it out for my holding company as well. If you think this is interesting and want to know more, then I highly recommend checking out the book that both inspired me and helped me create this. While my system is heavily influenced by this book, it's not a carbon copy, and there's a lot more to learn in these pages. I've left both an affiliate and non-affiliate link to Amazon for the book in case you wanted to support me at no extra cost. If you have any questions about this system, please drop them below. And as always, if you like this video, please share it with your friends. And if you didn't like this video, please share it with your enemies.